Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne, man with David Ingles.
Good morning. Let's get to your top stories today. U.S. futures are higher after President Trump extending this deadline on aggressive European tariffs. Samsung and Apple suppliers also in focus here in the Asia-Pacific over threats of 25% levies.
Meituan set to report earnings, its slowest sales potentially growth in years, with earnings from Xiaomi and Kuaishou also set to shape sentiment on Chinese tech.
Also ahead, Alibaba Chairman Zhou Cai urging Asian companies to look for opportunities beyond the U.S. amid these trade tensions.
And I'm Apeiron Hong in Kuala Lumpur, where tariffs loom large as the ASEAN summit begins, with China's premier also attending. We'll hear from Thailand's foreign minister about the need for closer integration.
Good morning. Happy Monday morning. Welcome to the show. New week, same story. The end on Friday was a weaker dollar, really big drop on Friday, which we are continuing to see going to the Asia-Pacific. So this is really the stage upon which we're looking at cross-asset in the market equation for the week, right? We're back to 16-month lows on the Bloomberg Dollar Index right now on the exact exchange rates where we are right now. So obviously there's a fairly risk-on move where we're seeing across assets following some news out of Donald Trump, extending, of course, that deadline June 1st to now in the early part of July. So you have the euro, you have I think the Aussie dollars coming through as well. The Kiwi dollar on the back of the dollar weakness, as you can see, still really pounding as far as the dollar is concerned. Although that said, we talked about risk aversion and risk appetite right now. Dollar yen 142.55. Equity markets, a few caveats, right? Memorial Day weekend, so thin liquidity. And as you can see, though, on price itself, that we're doing quite well. U.S. futures and going into the European session, which is also quite truncated in many, many ways. Euro stocks, DAX futures, and the Nikkei up 0.5%. So the setup going into the Chinese Open today, and by the way, we're up already 6 straight weeks. MSCI China, Hang Seng Index, Hang Seng China, Hang Seng Tech, and we are looking at some, being generous, okay, we're mixed right now across the futures right now. I want to mention, though, when you look at the yield, so we've been melting up here, Yvonne, as far as the 10-year yield is concerned. So we're at about 7-week highs here at about 1.7%. So we'll see this, of course, going into the Open today.
Yeah, interesting enough, we're actually seeing yields in China tick up higher, right? Yeah. And maybe it has something to do with the global effect, but maybe not. You take a look at what we're seeing in terms of the agenda in China, right? That renminbi strength certainly is one thing to watch. You mentioned about the dollar. We're trading around 6-month highs for the offshore renminbi right now. Li Chang, as we talked about, Apeiron, he's going to be at the ASEAN summit as well, as we see maybe more warmer ties with the Southeast Asia, with China as well. Meituan earnings are on tap here, and sectors to include, of course, those threats on Apple from Trump. The e-commerce sector, there was some draft guidance when it comes to some of these merchant fees and really trying to help out some of these small businesses and the like. Also robotics, there was a big competition in Hangzhou over the weekend here. We'll take a look at how these stocks are flying ahead of that. Trade data out of Hong Kong, and of course, HIBOR continues to be lower. We'll watch how that plays out here today as well.
Yep. Let's get to our top story today. President Trump says that he is extending the deadline for the EU to face 50% tariffs to July 9. Now, that follows a phone call with the European Commission President Ursula von der Leyen. Here he is speaking in New Jersey.
We had a very nice call, and I agreed to move it. I believe June 9th would be, July 9th would be the date. That was the date she requested. Could we move it from June 1st to July 9th? And I agreed to do that. And that she said we will rapidly get together and see if we can work something out.
Yeah, that's the latest from the president just a couple of hours back here. Let's bring in our senior editor, Brian Fowler, in Tokyo for us. Brian, good morning. Seemingly mixed signals on trade front late in the week. Then you have, of course, these comments coming through right now, coming out of the U.S. president, the extension of this deadline. Where exactly are we at this point?
Yeah, so Trump had unsettled markets by threatening to put that 50% tariff on EU goods from June 1st. Then he has the phone call with von der Leyen, and suddenly now he's pushed back that deadline to July 9th. And I think really the only thing we can say definitively is that Trump's tariff campaign will remain an on-again, off-again strategy that he's using to gain leverage over U.S. trading partners. And all the ups and downs will pretty much be determined by whoever he happens to have a phone call with. That said, I think there's a pretty good chance that some kind of a so-called deal could be announced before that deadline, only because it's in Trump's interest, of course, to do so, both for the optics and then also for the economic impact. We know that a 50% tariff on EU goods would drive inflation higher in the U.S. and weigh on growth. So I think the question will be how substantive is that deal when it comes, and until then, probably we'll see a lot of ups and downs and some volatility in the markets.
And Brian, I'm sure you've been focusing your team on what's happening in Japan in these trade talks. It looks like Japan has stepped up its pace lately with the chief negotiator Akazawa touting a possible deal by June. What might that look like?
Yeah, so we also, back on the phone call theme, Trump and Prime Minister Ishiba had a phone call Friday morning, Japan time, and that seemed to boost the momentum in these trade talks. Akazawa happened to be in Washington at the time. He's now come back, and he's talking about doing a deal in June. That's Trump and Ishiba are scheduled to have a bilateral meeting on the sidelines of the G7 summit in Canada at that time, and I think both parties want to get a deal done by then. We're seeing a lot of different hints of what could be in that. That Japan may pledge to invest in the LNG project in Alaska and buy more LNG from the U.S. There's talk about aid on shipbuilding, specifically on icebreakers. Japan has a lot of technology in that area, and icebreakers have a bit of a strategic importance now because of security concerns. There's also potential talk. We saw Masayoshi Son talk about a joint wealth fund that could be part of the talks. But the big key there is going to be what happens with autos. The 25% tariff on autos and auto parts is a big deal for Japan, and Japan has said until now that it's not going to do any kind of a deal unless it gets some kind of redemption, some kind of reprieve on autos for that. So that's going to be the key factor to watch between now and June.
I want to get to the Nippon U.S. Steel saga here, and we're seeing shares. We're up as much as 6. We're up 4 now there in Tokyo, where you are. Volumes are exploding. Do we have a definite timeline or a deal now because of all of this?
Well, it's kind of a mystery, really, to all of us here, because that $14 billion figure that Trump has touted in terms of the investment into the U.S. that he's talking about, that roughly corresponds to the exact amount that Nippon Steel was going to offer to acquire Nippon Steel. So is this a takeover, or is it just some kind of an investment for a minority stake? It's really unclear. Trump has said all along that he was opposed to a takeover and he would welcome an investment. And what he said, lately as well, he said, well, it's going to stay. U.S. Steel is going to remain a U.S. company with headquarters in Pittsburgh. He's trying to say all the right things that I think would appease any concerns in the U.S. about a takeover. But again, that $14 billion figure is right up next to the $14.1 billion that Nippon Steel was offering to buy it. So we still need to see what this really means. Share prices, as you said, are rising. Nippon Steel got off to a good start this morning at 6% at the open. So for now, everyone's optimistic, but I guess the devil is in the details.
Brian, thank you so much for the context there. To the point there, there's a lot we don't know still. Devil will be in the details here. Brian Fowler in Tokyo for us. Right, as we were just having that conversation, 2 big moves in the FX markets. Let's get started with the Philippine peso. You might have seen the headline coming through. 55.20 now is the exchange rate. That takes the exchange rate all the way back now to 2023. In fact, that day that we hit at around 55 was that gap higher in the exchange rate. You have to go back 2 or so years to get these levels. Again, Yvonne, this weak U.S. dollar story is playing out.
Yeah, you're seeing it across the Taiwan dollar once again, right? This was kind of where we saw where things were expressed the most, maybe just a few weeks ago. Well, it seems like that currency now back to levels that we saw back in May 5th when we did see that historic surge on the currency. So again, we did hear from the central bank just last week saying, look, they're just going to let the currency reset, right? Just let it go in some ways. And we are seeing that once again here this morning. Yep.
It's worth noting as well, the move across FX markets right now. So we started to show with the dollar at 16-month lows. It's only the yen and the Swissy which are on offer right now, which I guess gives you an indication of risk appetite, given the encouraging news coming out there on the European trade front. Right. New week. Same story, though. Weak dollar. Stephanie Leung is here with us, Chief Investment Officer at digital wealth platform StashAway. Good morning.
Good morning.
How are you thinking about the weak dollar?
I guess, lots to unpack and lots of things are happening. I think in the short term, it's basically reacting to a lot of the trade headlines. But if you look at kind of a currency from a longer term perspective, I think you can think about it from typically an interest rate differential perspective, but also from a policy perspective. And I think, there are quite a bit of uncertainty around these two kind of aspects. And I think that's why we've seen a lot of sort of hedging flows in the past few weeks to sort of hedge foreign exposure to the US dollar. I think that's been driving a lot of the Asian currencies, euro, etc. But I guess if you look at kind of the more medium term or longer term interest rate differentials, still the U.S. interest rates are much, much higher than other markets. And also, if you think about kind of inflation, U.S. is probably the only place where inflation is still quite sticky, right? We're seeing central banks across the world cutting interest rates because of lower inflation, because of weaker growth. But still, from that aspect, because of trade tariffs, because of U.S. economy just being stronger, the Fed is actually staying on put. So that actually is a supportive factor for the US dollar. Of course, in the near term, it's not playing out because there's still a lot of uncertainty with regard to the second kind of leg, which is policy. I think this is where kind of the big unknown is, right? Because we all actually don't have a good idea of what actually Trump is targeting in terms of US dollar, especially during all these negotiations with different nations. I'm sure currency is one of the agenda on the table, and how is Trump going to push the currency agenda? I think that's kind of a bigger risk that the market is worried about for the longer term.
Just the fact that we can get a U-turn so quickly on something like Europe and the like.
Or anything.
Yes. We thought we were kind of in this lull for 90 days, and then here we are, some more renewed threats. How do you even start to navigate that sort of volatility now?
Yeah, I think one thing that we've been telling our clients in the last few months has been there is a historical precedent that we can actually reference back to, which is 2018. So very, very similar to what's happening now. Initially, you've seen kind of Trump put out this kind of big bumper sticker as to, we're trying to target all these big tariffs, we're trying to target all the nations. And then you go into sort of a negotiation period. Because at the end of the day, if you think about Trump, he is still a politician. He is still kind of constrained by a lot of economic, interests, and also just kind of what the median voter thinks. And indeed, if you look at kind of the U.S. median voter, trade tariff is actually not on the top of the voters' kind of ask, right? These are inflation, labor market, immigration. These are their top ask. But I think Trump does need to kind of get the trade kind of deal out of the way because of the sequencing of things, right? Because he needs to sort of raise revenue for the government in order to push through his tax bills, his deregulation, et cetera, et cetera. Indeed, if you look at if you listen to Scott Bessent's interview over the weekend, he did mention that, they were trying to get a peace deal done, they're trying to get a trade deal done, trying to get a tax deal done. And all of the three, he mentioned the word deal. And as we all know, Trump published a book called The Art of the Deal. He didn't publish a book called The Art of the War. So I think at the end of the day, Trump is still constrained by all these things. He will get a deal done. However, I think from 2018 experience and from his sort of several steps to kind of getting the deal done, there's a lot of back and forth. There's a lot of last-minute kind of reversals. And I think given the market has already kind of reacted so positively to the trade truce between U.S. and China, and now we're sort of back to pre-Liberation Day levels, of course, there are kind of a bit of nervousness around positioning, etc.
Right. To be more specific, stocks have reacted well.
Yes.
Treasuries not. The complete opposite.
Yes.
How do I need to be thinking about treasuries now? Deal or no deal, does it seem like we're still going to melt up on treasury yields? And what does that affect collaterally across the world?
So I think at the beginning of the year, when we published our 2025 outlook, I basically titled it "Fat is the New Normal," right? Fat is FAT. So the first word, F, stands for fiscal dominance. Second word, AI. Third word, Trump. And I think, this is kind of the long-term trend of fiscal dominance playing out. If you look at kind of governments globally, not just in the U.S., but also, Germany, China, for example, a lot of governments are actually spending to get growth back, or spending to sort of, if you take a step back, roll back to 2008, the GFC, we've seen over a decade of monetary stimulus, right? Monetary dominance.
Yeah.
At current interest rates level, it's hard to push that anymore, right? So, what's the next, right? What's next is basically fiscal spending from governments all across the world. And, U.S. is pursuing a very, very similar kind of path. What this means is that government bonds are going to change. The characteristics of being a safety asset is going to change from what we've had in the past 20 years. And I think this is the beginning of it, which is why you're seeing kind of in this round of trade tariff, market concern, bonds is actually the weakest link. And assets like gold is actually shining. Even Bitcoin is up relative to bonds. And I think this is kind of reflecting the fact that people need to think about a sovereign alternative, think about not just a dollar alternative, but I think in general, bonds alternative.
Wow. Steph,
wow.
Stephanie, thank you. Yeah, Bitcoin as well as gold.
That's something.
Definitely to think about here as we take a look at these levels that we're seeing across Asia FX, right? Stephanie Leung there, StashAway Chief Investment Officer. I need to correct myself. I got a date wrong when it comes to the Taiwanese dollar. So we did strengthen past 30 against the dollar. It's the first time since May 6th, not May 5th. So, yes, still, though, we're continuing to see this dollar weakness story across the board.
Yeah. It's probably May 5th somewhere in the world anyway. It's about that time. But, of course, we just have to sort of cross our T's there, as they say. All right, Taiwan dollar. Counting down to the open of trade here, Shanghai, Shenzhen, and here in Hong Kong. And we're looking at a dollar weakness story just about across the board. Reference rate of the day, 718.33, with dollar China now at the lowest level going back to late 2024. The opening bell 13 minutes away. You're watching The China Show. Good morning.
All right, watching names like Alibaba, Meituan could come under pressure here today after regulators published draft guidelines to support merchants on their sites. Now let's get more with our tech reporter Annabelle Jewelers on this. So just break us down what the details of this so-called guidelines are going to be.
Yeah, so they came through over the weekend on Sunday, actually, and this is going to be a really interesting one to watch at the Open because it's really about protecting the little guy. And the little guy in China faces a lot of challenges right now. So these are merchants that are selling on big sites like Meituan or Alibaba's sites, JD.com. Not only are they facing things like tariffs and the end to the de minimis exemption, but you've also got this intense cutthroat competition within China. And then you've got names like PDD, for instance, that are offering really attractive policies to consumers. Things like you can return your goods and get money back even if you actually don't return the product itself. I mean, they're just things that are just like next level policies in place to try and draw customers to their platforms. The concern is who really pays or bears the brunt of this, and they're saying it's the merchants, and that's why you need greater transparency around fees and greater support for them as well. Just to note as well, on the earnings front, Meituan is going to be one of the key names to track this week because its earnings are due. Interesting to see, again, margins, how they're being impacted by names like JD, for instance, that are making a big foray in the food delivery business, and are they losing any sort of ground there?
Okay. The other story is you were very busy in Macau, of course, over the weekend. Joe Tsai was speaking, of course, also there. What did he say?
Yeah, so this was at the closing ceremony of the Beyond Expo in Macau over the weekend, and it was really just quite an in-depth discussion talking about how the business is faring not only with US-China tensions, but also about how they're faring with their restructuring efforts, because the companies, we know it had these plans a couple of years back to split off and to list 6 different business units. They've thrown that out the window, and now they're really doubling down on their core operations, e-commerce, and then also AI. They're doing very well in the cloud business. So Joe Tsai said that is going well, that turnaround effort, but also spoke about how companies can really still succeed even when you do have rising tensions between the US and China. But take a listen.
people have benefited from free trade, right? It was until recently some governments try to tear down this bridge that we have built between Asia and the rest of the world. If you look at China's trade with the rest of Southeast Asia, it's already as big as its trade with the United States. I think there's actually a lot of inter-Asia business activity engagement that can happen among the East Asian countries, between East Asia and Southeast Asia, and eventually South Asia as well.
So yeah, essentially just saying that companies that are in this part of the world can really look to opportunities within the region, but also to new markets. And he signalled out Europe actually being a particularly promising market for a lot of Chinese businesses.
Oh, thank you so much. Annabelle Jewelers there. On all the tech latest, certainly, yeah. Lots of names to watch, including, of course, the e-commerce names going into the open today. We're now down 0.4% going into the open. That's the Hang Seng Index. A50 futures are also off as well, and there's a big move coming through in the fixing today. The PBOC strengthening the midpoint by the most since January. More on that in a moment. The opening bell 6 minutes away. This is the China Show. Good morning. Good morning. Welcome back. You're watching the China Show. Just a reminder, we're up 6 straight weeks now. In fact, we're almost up about 18% from the bottom on MSCI China from April 7th. And along that ride, it's taken up a lot of the big names here in Hong Kong to quite some levels, right? So momentum stocks, these are the stocks with the strongest momentum here in Hong Kong, which might be candidates if you're, I could put a lot of weight on technicals, might be candidates to take some money off the table, given some of these do indicate that we are slightly in overbought terrain here.
Yep, certainly we are dealing with some volatility given what we're seeing, the trade headlines and the like. So maybe these are some of the more vulnerable stocks out there to watch out for here today. But yes, interesting to get those RSIs in. But you take a look at how the pre-market, how everything is set up here. We are seeing shares slightly lower, though, modestly lower. We're down about 0.4%. We'll focus on some of these tech themes, given some of the e-commerce sort of guidelines that we got. Not seeing a huge sort of movement in Meituan at the moment, but we'll get you an update at the open. That's coming up next. This is Bloomberg.
Good morning and welcome back. Happy Monday morning. So just out of bed quite quickly, no time to really get warmed up here. So Donald Trump this morning, U.S. president, talking about how he's extending this deadline for Europe. So that's really leading to dollar weakness and some risk appetite, in fact, across the board. So we talked about the Taiwan dollar, we've talked about the Philippine peso reaching these highs, and now the fixing coming through. And this is a follow-through, by the way, from the weakness in the dollar on Friday. The PBOC has strengthened the renminbi fix by the most since January going into the session today. So we're waiting for this to get up and running. Last trade on dollar onshore was 718.10. We'll watch that very, very closely, Yvonne. Yeah, not just a renminbi story, as you mentioned, right? So that dollar weakness we're seeing across the board. Look at Asia FX, Taiwan dollar strengthening past 30 for the first time since May 6th there. You see the peso also in the Philippines also rallying. So that certainly is going to be the name of the game here, is that dollar weakness and how this plays out onto equities, right? You take a look at how Chinese stocks are doing at the open. We're pretty flat on the onshore benchmarks, but keep in mind, right, that onshore renminbi rate we're watching very closely after that stronger fix from the PBOC. And Goldman Sachs had a pretty interesting note talking about, look, Chinese stocks are going to get a boost, at least the local ones, from that yuan appreciation. Kindra Lau saying a 1% appreciation of the currency could lead to about 3% a boost there for the local market. So certainly that's one to watch, whether that translates to the equity market in some way. So there you go. You take a look at how, overall yields are not doing too much on the bond market, but the 10-year yield is heading lower, actually, this morning by 1 basis point. Hong Kong's doing this right now. We're about 0.5%
to the downside for most of these tech. It certainly is one of the things that are leading lower here. We're watching what happens with the e-commerce names, right? So there was these draft guidelines really kind of trying to help the little guy or some of these merchants, and that might actually erode some of the margins for some of these e-commerce players like Alibaba, like JD. We're seeing Alibaba shares down about 0.5%. But look at Meituan. We're down close to 3.6%. Earnings coming out later on here today as well. We're watching Xiaomi and the like. So certainly the tech sector seems to be under quite a bit of pressure here this morning. Apple suppliers, certainly that's the next one to watch, given the threats that we heard from Trump when it comes to tariffs on Apple and really trying to get that production and manufacturing to be done in the U.S., right? We're certainly seeing that being felt here, the nerves around some of these Apple suppliers that listed here in the region. So AAC Tech down to 1.3% here in Hong Kong as well. Take a look at when it comes to earnings, right? We talked about Meituan, so certainly one thing to watch is, of course, the competition in the food delivery space. Kuaishou and Xiaomi certainly one to watch also. But also Xiaomi, they just came out with that SUV, right? Citi had a pretty interesting note saying, look, that SUV could actually significantly erode that market share for the Tesla Y in China, Dave.
Oh, the question is why? I guess we'll find out, of course, when they tell us why. Okay, a couple of things before we talk about those earnings coming through, right? So as Yvonne was pointing out, Kuaishou, Meituan are coming out as well. So the onshore rate is now up and running, 717.47. So we are opening at the strongest level since November on the onshore rate. CNY opening at about that level, following the strengthening of the fix by the most since January. Point number one. Point number two is when you look at the Hong Kong currency, and this is interesting, right? So just a few weeks back, we were flirting, if not tapped out at the very strong end of the trading band, and how quickly this has reversed. And this goes into the HIBOR story, which we'll get to later on, of course, which is now flirting with 0.5% on the 1-month HIBOR. Dollar Hong Kong is now at 783.39, which is now at nearest the weakest end of the trading band. You'd have to go all the way back to around this time last year on the weakest level as far as that's concerned. Trade numbers are coming out of Hong Kong today, so it's effectively what I'm saying is it's going to be a jam-packed session going into this fresh trading week. Right, now more on the earnings story. So Meituan is coming out later today, and we have our Catherine Lim, our senior analyst out of Bloomberg Intelligence, to give us, to help us give us a preview of these expectations going into today. And yeah, Catherine, what are the key themes you're tracking here going into these earnings?
Right, David. I guess tonight from Meituan, we are still expecting their earnings to grow, and particularly for their core local commerce, which is essentially, their delivery business. So that's for January and March. Now, I guess the question really is how sustainable this is going to be, given that, from March onwards, we've actually seen JD.com coming through, fighting for a share of the food delivery market in China. So again, even if Meituan actually does meet, the consensus expectations for 26% earnings growth, my biggest question is that going to last, through the rest of 2025?
Yeah, tell us a bit more about the margin effect, right? What are you expecting in terms of core local commerce margins, and do you think that could actually sustain?
Right, Yvonne, I think a few aspects to actually watch for on that. We have actually seen them raising the incentives for riders, perks for users, and again, trying to retain merchants on their platforms, because JD.com, even Alibaba's Ele.me, as Alibaba has also highlighted in its recent results call, they are all trying to actually get a bigger share of the delivery market. And this market itself is not just food delivery. We are also talking about on-demand delivery. And, believe it or not, 30 minutes, that is what JD.com is promising user. And anything more than 30 minutes, everything goes free. So try beating that, and the cost of trying to sustain this kind of service. I think let's see how it actually impacts the margins of these platforms.
Yeah, that goes into, so fine, competition is fierce onshore. I mean, good luck for anyone trying to compete with these Chinese players onshore, let alone when they go abroad. You know, Brazil, for example, and Meituan, and I think the planned $1 billion investment there to enter that market. How can the company justify that cost, given, of course, the challenges in that specific market?
Right. I hear you, David, and I'm sure that's going to be a question that's going to come through tonight at Meituan's results call. $1 billion over the next 5 years, and prior to that, they have also committed to nearly $260 million US for Saudi Arabia, and these are the two big markets outside of Greater China that's going to flow through to the new initiatives reported by Meituan. So we are expecting the losses to widen, and really whether they will be in a position to make inroads as quickly into Saudi Arabia and, more importantly, Brazil, which is a huge market, and there is a dominant player there. I think that will be the key question and thing to watch out for 2025.
Catherine, thank you. Catherine Lin there, our Bloomberg Intelligence senior analyst on Meituan. Of course, those results coming through a little later on here today. But yeah, shares are down quite a bit here this morning. We're also watching the price of Bitcoin. And yeah, we're seeing things still in the green when it comes to Bitcoin. But we're coming off when we actually did hit that 110,000 level just last week, though. But certainly seeing a decent day when it comes to crypto. Maybe that dollar weakness certainly is helping the crypto space this morning. We also did speak with the co-founder and former chairman of Chinese photo editing app Meitu, who sees Bitcoin's total value rivaling gold's within a decade. The billionaire angel investor Meitu told us why he is optimistic about digital assets and how he sees Hong Kong setting the path for mainland China.
We know that Bitcoin prices fluctuated a lot since its invention in 2009, but it recently hit a record high of 110,000 US dollars. It proves that Bitcoin is digital gold, and this is being recognized by more and more people. I believe it will chase up to gold prices in several years. The total value of gold is 22 trillion US dollars. I believe Bitcoin will reach the same level within a decade.
When you say it could near gold prices, what do you actually mean by that exactly? What is the sort of the frame for comparison, and what's your target on Bitcoin?
It will grow by tenfold. The market cap of gold is 22 trillion US dollars, while Bitcoin is worth 2.2 trillion US dollars now. I think it can still grow another tenfold at 1.1 million US dollars.
You speak about how regulation impacts the prices of Bitcoin and other crypto tokens. Do you think China will ever change its stance on crypto?
I think for the Chinese government, they want to use Hong Kong as a testing ground. If they see success, I think they may replicate some policies in China. We don't know how long it will take, but we've seen Hong Kong's success encourage Chinese policy development. The Hong Kong legislature passed a stablecoin bill recently. I think we could even see the issuance of offshore RMB stablecoin in the future too.
That's really now how you need to compete in AI. It's your application. It's that application layer where you need to stand out.
I think the market for large language model development is fully saturated. It will be very hard for newcomers to enter this space. Those who remain will struggle for a while. The current competition is focused on AI applications. In the next 3 to 5 years, we will see countless AI applications come to the market, and LLMs will also improve because of it.
You've just made a really major investment into the Hong Kong ecosystem for Web3 with a real estate purchase, but what exactly are you planning to do with that?
I'm not doing this because I'm optimistic about Hong Kong's real estate market. It's because there are physical tech hubs in Chinese cities like Shanghai, Beijing, and Shenzhen, but there isn't such a place in Hong Kong. I see tech companies scattered in different financial buildings. I will establish an AI Web3 concentrated building for entrepreneurs and create a base for them.
How many startups are you planning to be able to incubate, and also what's the timeline for this?
There will be 30 to 40 teams coming into my tech hub in the first batch, which will bring 200 to 300 projects in a year.
Yeah, there we go. That was the co-founder of Meitu and the former chairman speaking with Bell, of course, at the Beyond Summit that just wrapped up over the weekend in Macau. Just ahead here, and we're continuing our coverage of geopolitics. Southeast Asian leaders are meeting in Malaysia for 2 days of talks as U.S. tariffs loom over the region. We're live to the meeting venue. Coming up, this is the China Show.
Well, Southeast Asian leaders have started 2 days of talks in Kuala Lumpur, seeking to deepen ties with China and Gulf nations and mitigate the fallout from President Trump's tariffs. Our Avril Hong is at the ASEAN summit, and she joins us now. And Avril, we heard from Malaysian PR Anwar just a few minutes ago. What did he have to say?
Yeah, the Malaysian Prime Minister speaking at this ASEAN summit. Of course, this is the engagement between the 10 members of this regional bloc, and they have gone into this plenary session. Following this, there will be a retreat. We are still watching out for that big event tomorrow, which is going to be the ASEAN GCC China summit. This is a trilateral summit, the first time that an event, a meeting of this nature is going to be taking place at a time when these fast-growing economies are really looking for markets to diversify into in the face of U.S. protectionism as well as uncertainty. So that is the backdrop that we're seeing this taking place under. But the nuance here is that ASEAN member nations need to be a bit careful about calibrating the messaging so as not to be seen as realigning away from the U.S. So to your question about what we heard from the Malaysian Prime Minister, he says that he wrote to Trump seeking an ASEAN-U.S. summit. Keep in mind that these 10 member nations, they're all individually negotiating with the U.S. Have a listen to what the Prime Minister had to say.
I've taken the liberty also to write to President Donald J. Trump to seek his understanding to organize a U.S.-ASEAN meeting, which means we observe seriously the spirit of centrality.
Now, for context, this is all happening against the backdrop of these 10 countries, as I said, individually negotiating with the U.S. for lower tariffs. There had been some suggestion initially that the bloc would negotiate as one ASEAN for lower tariffs. This has been a suggestion that was rejected by the White House. Of course, we saw Malaysia kind of pushing and advocating for this. So that is the context when it comes to what you're hearing from the Malaysian Prime Minister.
Well, Avril, I mean, speaking of the context there and conversations we've had and heard from officials, I mean, you spoke with the Thai foreign minister earlier. What did he say?
Yeah, the Thai foreign minister, I spoke to him just a day ago on the sidelines of these ASEAN summits. And really here, even as we see these major powers, including China and maybe some of these GCC countries courting the Southeast Asian economies, it's also about how ASEAN economies are getting better integrated and pushing through integration into global supply chains and with each other as well. That is the key here amid these growing uncertainties. Take a listen.
The tariff is each and every one of us has to work with the United States individually, but all together among our 10 ASEAN member countries plus one in the future. We must be strong together. Strong together means that the ASEAN have to move towards the integration, more and more integrations in the economic collaboration. Right now, ASEAN's become major trading partner with each and every one of us. That means the intra-trade between ASEAN is now very strong. So these kind of two issues that ASEAN is looking for to promote the integration and to show to the whole world that ASEAN are very strong. We are talking about the sharing of the economic supply chains, because in the future the products produced by each and every one of us can serve the purpose of sharing of the supply chain, and that is the key. Leads to the integrations as more and more deepening of our relationship and integrations of our member of ASEAN. One country cannot, finish the whole product. We have to share the advantage in, the manufacturing. So that means we share the opportunities for supply chain.
When it comes to Thailand now being a partner country with BRICS, what are the benefits that you've already been seeing?
Well, we look at BRICS as a platform of collaborations. We don't look at the BRICS as the political bloc. There'll be a huge advantage for Thailand for the bigger markets, because this country they're very big, and also the bigger markets, the new opportunities for trading with another group of countries are very important for Thailand.
Does this mean that Thailand is considering full membership at some point?
Yes, of course, we would like to be a full member. I cannot say when, because that's what I keep saying to all the founding father of BRICS, that in particular uncertainty, situations in the world, if BRICS can have more full member who are very strong very active in global markets and in the sustainable development. You have to understand that Thailand is focused on sustainable development. We are the country coordinator of sustainable development in ASEAN.
Minister, let's talk about Myanmar. This is a conflict that has dragged on for more than 4 years. Thailand, of course, amid all this, is among the countries that has been playing a leading role in efforts for peace. We've seen more recently the inclusion of General Min Aung Hlaing in dialogues, seen as a very controversial move. Do you see increasingly the junta, the military, being included in dialogue?
Thailand would like to change the mindsets of negative collaborations to a positive collaboration to get rid of the transnational crime. Like I said, drug trafficking, human trafficking, and an online scam. And that works very well. Right now, Myanmar and all the neighboring country of Myanmar are looking forward to work closely together in order to collaborate to fight against those transnational crimes.
So Myanmar, this protracted crisis potentially being discussed. BRICS, maybe Thailand gets full membership at some point, but keep in mind this is an organization that does not involve the U.S. Keep in mind as well that in the past week, a number of ASEAN leaders have already expressed that it's getting increasingly difficult to balance both the U.S. and China, that path getting narrower. David.
Avril, fantastic conversation there in KL for us, covering these meetings taking place as we speak. Right. Speaking of uncertainty and the difficulty in dealing with this uncertainty, Torsten Slok, of course, if you know his Daily Spark, this email he sends out, of course, to Apollo clients, if you signed up as well. So the context here is, yes, we are in this this detente on trade. It's about 2 weeks, or going on 2 weeks, or nearly 2 weeks in his words, since the trade deal, this 90-day pause. But in his research, there are no signs of a rebound in container traffic, which I guess begs the question to his point, are 30% tariffs currently still too high? And I think when you juxtapose that against Europe, which is 50%, and effectively the assumption is that you get to 10%, will that still be too high to really make trade possible on both sides?
Yeah, I remember we had a trade guest a few weeks ago that's saying 30% is still high. to actually spark any sort of trade flows. I think she mentioned 10% is sort of the level where maybe you start to see more activity coming through. So maybe there isn't so strong front loading as some expected here in this 90-day period. Yeah. All right, we'll continue to watch that one. Obviously, if you want to take a look at all the interviews that we've been talking about out of ASEAN, out of course, all the big conferences and on the shows as well, subscribers can join at TV Go for all of the most updated sort of news and interviews of the day. Make sure to check it out. All right, taking the markets here this morning, watching some of these e-commerce names. Meituan is the one that continues to be a drag this morning. We're down some 6% here ahead of this earnings as well. This draft guidance from regulators talking about online platform merchants fees certainly is a risk to the margins for some of these players as well. So Meituan getting the thick of it here today. JD also lower by about 1%. You take a look at how the China nuclear stocks are doing as well. So they're actually seeing some gains here as Trump signs these orders. So that certainly is helping as well. And of course, we're watching currencies this morning.
Yep, weaker dollar, weakest in about 16 months. That's continuing, and these are levels we haven't really seen across some exchange rates going back a couple of years. Dollar Taiwan, dollar Japan, and of course dollar China back to November low levels. Plenty more ahead.
Welcome back to the China Show. We are looking at the HSI just a half hour into the session, and we are continuing to see some declines, albeit we're off some of the lows. But then again, it seriously is volatility that we're dealing with today, particularly when it comes to the FX space as well, just given this U-turn that we saw from President Trump when it came to EU tariffs. Looks like they're delaying that at least deadline to early July now. That hasn't been helping the equity market too much. And really, after what we saw on Friday, not much of a recovery either.
Yeah, speaking of U-turn, right? So I was awake in the very early hours of Saturday, already awake, not still awake, I think, just to caveat that as well. And I was looking at the really big drop in the US dollar, and I was making some notes going into, so I could use them today on Europe. And then we got in today, and it was the opposite of what my notes were, so I had to rip that out and going into today. But yet, the U-turn coming out of the president going into today on the Europe story is really leading to the point Yvonne was making on all the vol coming up. But all that being said, Mark Cranfield is joining us later to really help us unpack really what the week will look like given the given that we already know and given where we are in the dollar, right? Bloomberg Dollar Index weakest or lowest since 2023. Right, a couple of changes to some, let's talk about the benchmarks right now, additions and large cap additions to be more specific. Air China Cargo, SF Holdings, Shunfeng, Malgoping, and you have Horizon Robotics. Speaking of robots, we'll have a more, I would say, closer to person piece, but it's really on robots and what happened in Hangzhou. Did you see that story? No.
Humanoid robot competition?
Combat competition, yeah.
What are the pictures? I gotta see that.
And I wonder who won, because the market's already actually quite reacted to that on Friday with some big gains in some of these robotic-related stocks. So I'm curious who actually took it. Is it a who or is it it?
I don't know.
It's still, well, one thing you don't have to worry about, change the page, please. If we do get replaced by robots, it's still going to be HR, right? It's just that it's just humanoid robot relations and not human relation. Anyway, okay, I'm still waking up. We're doing well on the equity markets because of the encouraging news coming out of the president. And as you can see, 1% to the upside in S&P futures. And I think it's also worth pointing out it's Memorial Day weekend, so liquidity is going to be challenged today. So you are going to get some price movements, maybe exacerbated to some extent. We're better on the euro by about 0.5%, right? It's a big week ahead.
Yeah, Maybank holiday in the UK as well, to add to those liquidity concerns as well, Dave. But you take a look when it comes to what we're watching out for this week. We have some data out of China industrial profits, some key central bank meetings as well, so the BOK, also the RB and Z. Both of those expected to cut as well. We'll see if the currency does anything, but given the strength that we're seeing across Asia FX here today, Aussie CPI numbers, but the key one is we're going to watch out for is that US PCE index here, just given what we've been seeing in the treasury market and the volatility around yields as well. We end the week with some Japan data, also India first quarter GDP numbers as well. But a big week when it comes to tech earnings, right? We talk about Meituan. Shares are lower here already this morning. You got Xiaomi. But the big one, right smack in the middle, is NVIDIA on Wednesday, Dave.
Yeah. Some of you might have actually seen this, and I'm going to go back to social media. I think Yvonne knows where I'm going with this. There was this viral video going around of Jensen Huang digging into what really looked like a really good set of noodles.
Oh, yes. I did see that.
And I couldn't stop watching him going. He was going at it.
I mean, you have the media just focusing on everywhere he goes when he's in Taiwan, right?
Yeah.
Even to the noodle shop that he goes to.
Yeah, low on carbs.
Yeah. He still looks good in that leather jacket, though, so he's doing fine.
There we go. I wonder what the shop was called. Anyway, okay, let's bring in Mark Cranfield with us right now to talk us through what the week likely looks like. So Mark, we have let's take a step back from noodles here. PC is coming out on Friday. There's a weak dollar story. We've had some of the longer-term inflation expectations really pushing, I think, multi-decade highs in some cases. Is that something we should be expecting coming through towards the end of this week, Mark?
Yeah, indeed. Before we get to the dollar, just to clarify, there is no robot that could replace David and Yvonne's show. That's just to be clear.
Oh, not you either, Mark. We need you.
The clear thing that came out over the past 48 hours or so is that the theme for the dollar going lower is something which has got traction. It is a clear narrative. It is happening regardless of the flip-flopping that you see from policies, whether they're coming from Donald Trump or from anywhere else. So the very interesting point was that on Friday, as David was saying, European equities got crushed. There was a lot of volatility in the bond market, and yet the euro was higher. Look at where we are again today. We've had some retractions. We've had a talk between the European leaders and Trump, and yet the euro is higher again. The dollar is weaker overall. This is something which started earlier in the year. It continues to be the case. Even China's central bank, the PBOC today, they lowered the fixing once again for dollar yuan. Not as much as traders were expecting or were hoping for, but still they're pushing in that they're allowing the yuan to catch up with what other Asian currencies are doing. The dollar downtrend is not about one currency, it is across the board. It is gaining traction, and it is something that is going to continue regardless of whether US inflation goes up, goes down, whether the Fed stays on the fence, whatever other central banks are doing. Macro traders are making it very clear that the way they are expressing their view on US policies is by shorting the US dollar. They're going to continue to do that because unless there's a massive change in the way the US addresses its fiscal deficit, makes more clarity on its policies in terms of trading with other nations, the US dollar is the weak link, and traders are very comfortable continuing to push for more dollar downside.
Mark, you kind of previewed this last week about what's going to happen in JGBs this week with that 40-year auction. You said you're glad you're not going to be there for it. Tell us what's in store.
Well, if you think back to the end of April, it was the Tokyo CPI report which triggered a big jump in Japanese yields. There's some other factors in the background as well. It seems that domestic investors have almost given up investing in long-term JGBs for the time being. But it was definitely the Tokyo CPI report which helped to get things going when it was a hotter than expected report. At the end of this week, we have the next Tokyo CPI report, which of course fed through to last week's national CPI, which was also above forecast as well. Once again, we're looking for core CPI in Tokyo to go higher, 3.5. That'll be the highest for more than 2 years. Japanese bonds are not going to like that. In between, you have a 40-year JGB auction, which is typically the most difficult of all periods in the Japanese curve to sell. There's not much natural demand for 40-year. Japanese insurance companies are the main buyers, and they don't seem to be very interested, even though yields are at record highs for the 40-year sector. That hasn't got a long history, but they're at very high levels. 3.5% or so, somewhere in that area. And the curve is very steep. So even though there's a lot of term premium compensation, because core inflation is so high, basically yields are flat. In fact, in some parts of the Japanese curve, we've got negative yields. That's not helpful at all for fixed income investors. They expect something above the inflation rate, not in line or below. So you've got a very difficult 40-year auction coming. Expectations that Tokyo CPI will feed into higher national CPI again. And you've got the yen starting to gain strength as well on the foreign exchange market. It is not a great recipe for the JGB auction this week unless there's a sudden change of heart from domestic investors. And to compound it, the Bank of Japan met with traders last week. They took their feedback on whether or not it was a good time to continue reducing their purchases of JGBs. Most traders in the market seem to accept that the Bank of Japan is on the right path. They should reduce their balance sheet. They should continue to lower their purchases of JGBs. All of that is not supportive for the Japanese bond market. Let's see how it goes. But the 40-year auction is going to be a very tricky one this week.
Mark, thank you so much. Mark Cranfield there in Singapore for us. Yeah, and Yvonne, we'll be having more, of course, on the U.S. economy here coming through.
Yeah, we have a big interview coming up. If you take a look at what Neil Kashkar is going to say, he's the Minneapolis Fed president. He's going to be joining Haz for Insight there. Exclusive interview happening at 11 a.m. Hong Kong time.
Okay, let's talk more about tariffs and companies, specifically in this case. You have President Trump threatening to impose tariffs on Apple and other device makers, including the likes of Samsung here, a move here to encourage those firms to move their manufacturing in some capacity back to the U.S. Let's bring in our tech and geopolitics reporter, Mackenzie Hawkins, is here with us on set to talk us through what we know so far about these threats coming out of the U.S. president.
So Trump put his sights squarely on Tim Cook and Apple and said, if you don't move iPhone production to American soil, you'll be hit with a 25% tariff. He later clarified those remarks, expanding it to Samsung and other device makers and encouraging them all to move their production of iconic devices like the iPhone or the Android to U.S. soil, lest they face a 25% duty.
How realistic is it that Apple could actually make an iPhone in the U.S.?
No one knows how much it would cost. Everyone just knows it would be incredibly difficult. Apple has said that it will move some of its iPhone production from China to India, specifically its U.S.-bound iPhone production. But you have to remember, Apple has spent years and years building manufacturing capacity and capabilities in China. There are entire Chinese cities that are dedicated to iPhone production, and the U.S. simply lacks the manpower and the know-how to make that happen on U.S. soil. Commerce Secretary Howard Lutnick has said, okay, those armies of millions of people who are screwing these tiny components into iPhones, we'll just automate it. You have to remember, iPhones change. You can't automate an entire factory and then 6 months later re-automate the entire process for a new product. So if it happens, it would take a long time, and lots of reasonable people would doubt whether it could ever happen.
All right. We're going to leave it there. But Mackenzie, thank you. Mackenzie Hawkins there, our Bloomberg Technology and Geopolitics reporter. Still ahead on the China show. We got Apeiron Capital joining us to talk market strategy as we look ahead to the 2025 Seoul Hong Kong conference later on this week.
But ahead of that, Michael Page joins us to talk us through a deep dive into the state of the job market here in Hong Kong. Olga Leung joins us in a couple of minutes. Stay tuned for that. Plenty more ahead. You're watching the China show. Good morning.
It is gearing up to be a busy year for the Hong Kong Stock Exchange. Just last week, the city saw two big listings, right? You may remember CATL and Hengrui Pharma, and more are on the pipeline, too. Free Tech Intelligent Technology recently resubmitted its pre-listing documents to the Hong Kong Exchange. And meanwhile, Chinese ride-hailing platform Taotao has also filed for a listing after getting a green light from the CSRC.
Now, you have China's Southern Airlines said to be mulling another listing here in Hong Kong for its cargo business specifically, and you have its shelving, of course, plans to do so on the other side of the border. Meanwhile, you have FWD, of course, which is the big one, back in the news, back in the markets again, filing for a listing here in Hong Kong that sources say it could actually happen this year.
Yeah, so does that mean we need more bankers? We need more deal makers?
We always need more bankers.
What's it like in the Hong Kong market here right now? Let's bring in an expert here, Olga Leung, Managing Director at recruitment agency Michael Page. She joins us here in the studio. Olga, it's great to have you back in the studio. I mean, it seems like things are picking up. Are things picking up on your end?
Things are picking up on our end. I think since the start of Q2, we've seen an uplift, especially across buy side. Sell side front office has always been active, but mainly across corporate, retail, and private banking, wealth. Not so much yet on IBD in spite of the recent improvement across IPO markets.
Okay, so talk to us more about buy side then. What do you think is driving that demand on your end?
A lot of asset managers are starting to pick up, especially those with the focus in retail funds.
Okay.
There's also a lot of Chinese clients bringing the money to Hong Kong and taking it outbound. So there's a lot of money there where it's startups or they could have existing shops in Hong Kong and the money's flowing in.
You mentioned that you're not quite seeing an uptick in front office investment banking roles, despite what we're seeing in the IPO market. Why not?
I think the uptick has only been more recent, and bearing in mind, front office still has a lot of employees within, right? So I think the people who are currently holding jobs would be happy to see that the market is improving, but it hasn't quite translated into creating new jobs for new people coming in yet.
What about budgets and packages? What are you seeing as far as that's concerned?
This has been a challenging area, I think, across the board. Over the past 24 months, it hasn't quite picked up in terms of salary. But the irony is there is a new trend where candidates are expecting larger salary increments. And so there's a gap in between what employers are willing or able to offer and what candidates are expecting when they're making a move.
Is it just about salary or what other factors are involved?
Salary is a big one and probably the largest one we've seen over the last 3 decades. I think the last time I was here, we were just off the end of COVID.
Yeah.
And at the time, you would get work-life balance, stability, and flexibility being huge drivers. Over the last 18 to 24 months, we've seen salary being the biggest push factor of all. There's still a collective group of candidates where they still value stability and work-life balance. But salary is going to be the huge driver, and their expectations on increment is far above what market can afford.
Okay, so give us not a specific example. So let's say, how much would candidates usually get in terms of increment if they move firms, whereas if they stayed at the firm and just a natural increment year to year? Just compare those two things for us.
Okay, so if you stay within a company without a promotion, the inflation increment we've seen over the last few years is averaging anywhere between 1% to maybe 5%. I think there was 1 year where I remember it was moving into 2023, because it was off 2 bad years, the inflation adjustment was larger than usual. But over the last 2 years, it's still been between 1 to 4. Now, that's without a promotion. If you make a change in job, right, in the past, the market can support 15 to 25% increment.
That's base.
That's base.
Wow.
That's on base salary. However, in the last 2 years, we haven't really been able to see that sort of increment. So you're looking at roughly 8 to 10, maybe 15 if you're a really good candidate. And so the challenge is employers are still open to paying that. However, candidates want more than that. And it's probably because they've been waiting for so long, the market hasn't been great, and they want that extra oomph when they make a move. So most candidates, you will find when they first approach us, they're looking for 25% and above. And our clients simply are not offering that sort of budgets nowadays with all the uncertainties in the market.
Yeah, these candidates got to reset their expectations in some ways, it seems. What are you seeing in terms of just Western financial firms versus some of the Chinese banks as well? Is the hiring activity any different?
We see an increase across Chinese securities. The larger Chinese securities houses, they are being quite active, and they are prepared to go out to get good talent. Their bonuses are usually much more rewarding, starting from 4 months and above. However, base salaries will be shy of what the multinationals and the Western players can pay. And then obviously you've got the brand in play, and Western players usually offer better flexibility, or you get a 1 day or 2 days work from home, whereas the PRC players don't. So when candidates assess these opportunities, those factors also come into play, although they were not the key drivers to begin with.
Okay, what about the age-old question in Hong Kong? Is there still demand for non-Chinese speaking expats? Like what's the market for that like?
I will say there are probably less demand for those sort of professionals. However, if you're a senior executive and you do have your own clientele, or perhaps you have other, things that you can offer to the company, it's not a no. It's just that naturally when clients look for candidates, they always hope for the candidate to be trilingual, where they can service all the areas that they look after.
Final question. You guys put out this report recently. Is there anything that we missed just now that you think is important to note as we look ahead? Trends to watch, what have you?
Yes. So at Michael Page, we produce an annual salary survey, and it's a global survey done over 50,000 professionals. And so the theme of this year's results is clarity. And when I first read this report, it really resonated with me because the last few years has been nothing short of challenging for most. And what candidates have started doing is they start building up a certain level of ambiguity when it comes to their careers. So they're open to not knowing what their salaries would be, what their bonuses would be, or where their career would go because of all these uncertainties in the market, right? But then now, there's been a major shift in the trend. So they want answers. And it includes salary, bonuses, and career progression. Yeah.
Okay. Great. Well, yeah. Employers, listen up if you can. There we go. Olga, fantastic. Thank you so much. Olga Leung there, Managing Director at Michael Page. Right. Plenty more ahead here on shows. We get you guys a roundup of these market moves coming through. It's generally a quiet day. It's a cooler day, though, across Hong Kong, at least. The hot and humid days of last week are gone, and let's see how far this actually progresses into the week. Happy Monday morning. You're watching The China Show.
Looking at shares of Nippon Steel in Tokyo here right now. So we're still seeing some gains, but we're quite off some of the highs that we saw. Initially was seeing a pop about 6%. So we're still talking about this Nippon deal and exactly what was actually accomplished between the U.S. And Japan when it came to U.S. Steel and Nippon Steel. So certainly Trump gave the blessing for the partnership. But what does that all mean? Let's bring in our Tokyo Bureau Chief, Isabel Reynolds. She joins us now. Your team has a great sort of headline this morning about how we have a deal, supposedly, but there's still a lot of questions that are still looming, Isabel.
Yes, absolutely. I mean, looking back to say what did actually happen at the weekend, I think the simple answer is that nobody quite knows except possibly President Trump. So looking back a little bit further, this deal has been in the works for about a year and a half now. Nippon Steel has made an offer that most analysts see as very beneficial for U.S. Steel. It's an investment, it would be an investment of $14 billion. Nonetheless, it has been opposed for potentially for political reasons, first by President Joe Biden and then by President Donald Trump. We just saw in the last few days a sort of unusual series of events. So we saw the CFIUS, the National Security Report, went to Donald Trump. The reports were saying that it was basically leaving the decision up to him as to whether to push ahead with this deal. He had always said he was against it, of course. Then we saw him call Prime Minister Shigeru Ishiba of Japan on Friday. We don't know the full content of what was said, of course, there. And then early in the morning on Saturday, our time, President Trump came up with this announcement saying that he welcomed this partnership. Without specifying exactly what a partnership meant. But he did mention that figure of $14 billion, and he did mention an increase in employment of 70,000 jobs in America. Markets there took that to mean approval of the actual takeover deal. But that is still really not clear. And so that's, I think, why you've seen early in the markets here in Japan, Nippon Steel went up briefly in the morning, but it's now fallen back again. And I think the ultimate result is that nobody really knows what's happening.
Yeah. It begs the question, are we any closer in terms of clarity or actual progress compared to late last week? I guess, well, the market's starting to say it's probably no for now, but we'll see. Isabel, thank you so much for the context. Key nuance there to hit as we go into the Tokyo lunch break, and we're just close to reversing now just about all the 6% gains there in the opening minutes on Nippon Steel. Right, a couple of stocks to track here. We'll just stick with one for now. Wise Tech. We're looking at quite a substantial gain there of about 5.3% to the upside there. Company is acquiring E2 Open parent holdings, a deal valuing the firm here at 2.1. That's the largest acquisition ever as far as that specific space is concerned. This is an Australian shipping company, shipping software company, of course. Plenty more ahead. This is Bloomberg.
11:29 a.m. in Tokyo. Japanese markets are heading into that lunch break, and we are seeing at least stock slightly higher here this morning. We are still dealing with some strength in the currency as we continue with this dollar weakness, but certainly we are seeing, the yen, the Swissy are still kind of catching that sort of haven status of given the volatility that we're seeing around trade and the like. Keep in mind, we're still watching the JGB market, that 40-year auction, as Mark had mentioned about, really kind of foreshadowing how ugly it could get this week in the JGB market.
Yeah, Mark Cranfield, our markets guru, I'm not sure if he's taking that off deliberately, but he says he's not going to be around to see that, fortunately. So we're coming off a horrible 20-year auction in Japan last week, lackluster one, I think, on the 20-year, I believe, in the U.S. And, of course, at the end of this week is the Fed's preferred inflation gauge. So that's the sort of macro backdrop against which, of course, we're looking at these markets getting underway this week quite on decent footing. Right. Let's have a look at where we are as far as Asia Pacific, and at that very note here. So we're up now 1%. It's Memorial Day, so that's a caveat as far as liquidity goes here in this market. But again, we're doing well as Donald Trump extending that deadline for Europe to the first week-ish of July from June 1st. So that's really giving some runway, at least to risk assets for now. Now, of course, news flow tends to change a lot, so I think just stick with that headline, at least for now. Right. Now, speaking of Liberation Day, right, so that was early April. A few days after that, equity markets specifically bottomed April 7, April 8. What that means for MSCI China, for example, I think we have a graphic that's going to about to show you this. So we're now up about 18% on the benchmark from that low that we hit on April 7. We're up 6 straight weeks on the Chinese equity complex. We're down a little bit today, though, as we start off the week. Now, what does it mean as far as the valuation gap is concerned? S&P 500 has underperformed roughly MSCI China. Charts coming up. You're looking at the differential PE gap, forward PE, 12 months. And we put your standard deviations in just to give you a clue of where we are historically. So despite the recent underperformance, S&P still remains about 1.5 sigma above the historical average. So if you are a mean reversion kind of person, might this be indicative of more flows coming into I guess, undervalued parts of the equity.
Yeah, if you're wondering how this sort of U.S. exceptionalism story plays out, maybe we're not quite done with that story yet, or at least diversifying away from that story. And we're seeing that with the dollar, right? Very, very clearly here. That's still the big way to express, I guess, these doubts when it comes to the fiscal concerns and even the trade headlines that we continue to track here, that U-turn this morning. From more, let's bring in Wanyi, founding partner at CIO at Apeiron Capital. She'll be speaking at the Seoul Hong Kong Investment Leaders Conference later on this week. Wanyi, it's great to have you here. Given just what we described there, this environment where there's so much volatility, the dollar certainly has been continued to be a weakness here. How do you look at stock picking overall in this environment?
I think because we're always a fundamental stock picking house, so the job is to pick out stocks regardless of the market conditions. But investors are likely to be concerned about the current environment, so we sort of have skimmed through the current portfolio, see if there's anything directly exposed to tariff talks. And because I'll focus on long-term growth and innovation, so actually there's actually very little, close to zero, direct exposures to tariff talks, but it's more of what's the impact of a general market sentiment. But that's something beyond that. So we're just focused on single stock picks.
So how's the fund done this year, and how are you guys doing tracking so far this month specifically?
So as we speak, we're up about 6% in May. So that brings our gross performance year to date to about 20%.
Okay.
Yeah, I mean, a lot of people talk about this market, right? That, obviously growth is one concern, deflationary pressures. But, if you look at it from, we have a trade truce, things are still looking okay in this market, right? But how difficult is it now? Or is it in looking for very convincing bottom-up ideas?
Yeah. I think I've been in this for about 20 years. I think growth investing in China has completely changed. Like it or not, I think it's a much harder game. So if I look back at the stocks we picked 20 years ago when I was a fresh analyst, it wasn't that hard. You picked the dominant internet players like Tencent and Baidu, and then you congratulate yourself, thought, it was my stock pick. But actually, how much of that was just the trend? I think regardless of what's happening geopolitically, Chinese economy has come to a stage that growth has slowed down. So I think growth investing in China is harder to come by, but we need to focus on different things. As I said, I think when we were looking for growth in China 10 years ago, almost 10 years ago, when I started Apeiron, it's about can we discover global franchise that have untapped potential in the Chinese market, the global investor base we're ignoring. And that has been a strategy that really has played out well. If you look at our fund performance early in the years of launch, I think a good example would be Tesla. Chinese market, the profitability and the volume is really what made Tesla a global success. It's not how many cars they sold in Norway. But now I think the game of finding those stocks in China is the other way around, is we have come to a stage, we have accumulated enough know-how and capital. Can those Chinese companies become global leaders? And I think it's not something that is uniquely new to China. We have seen that with Japan, we've seen that with Korea. So really, if you look at our portfolio today, we have a collection of Chinese assets with global ambitions. I think that's the only way to make profitable return for the investors, because domestic profitability is diminishing across all industries.
Yeah, and I think to the point you just made, they're being forced to look outside. And I want to draw analogies, if I could ask you the question. When you started out, you said it was easier to pick the big tech names because there are very few of them.
Yes.
Right now, I could make the same argument. There are very few Chinese names that have a convincing case they'll be globally dominant. Is that investment universe to pick those names easier at this point, or is it getting increasingly difficult?
I tend to run, and I prefer a concentrated portfolio. So in the way, I think you're absolutely right. And that's the game for bottom-up stock pickers is if you remember a study that was written by an Arizona State University professor. He said in the last century, only 72 stocks that counted for all 50% of all performance over T-bills in the United States. So I think that concentration of outperformance is universally true. So in that way, if that universe is actually quite small, is that wrong? I think it's actually natural. So the game I guess it's not about how many of those truly exceptional companies you can find. And I think by nature, there's actually a very small collection of those truly exceptional assets you want to own as long-term investors in our long book.
Right. I think, part of your fund fact sheet that we got, and I think we're going to display that on the screens, is that your top 5 longs are 50%, roughly 50% of the portfolio. How are you managing concentration risk? Or is that something you're not worried about?
I don't tend to associate concentration with risk. I think it's conviction.
Okay.
And I think when you run the portfolio, sort of risk is inherited part of it. And the way I look at it is, despite we own a relatively concentrated portfolio, how do I think of the correlation between the top holdings? Yeah. Are they related? Are they driven by the same drivers? The last thing you want is a manager owns all the e-commerce players in the world. I think that's actually more concentrated and related than if I have 5 top holdings, each is over 10%, but if I can carefully craft them, they are driven by very different drivers, then I think that naturally introduces diversification into a relatively concentrated portfolio. But yes, I wouldn't shy away from making concentrated bet that reflects our convictions.
Can you tell us a bit more about where you have the most conviction? I mean, I think you have, in terms of longs, more opportunities there than shorts right now.
We typically run a long biased, high net strategy. On the longs, I think we probably have to sort of split it to China and non-China. In the China space, our biggest bet is actually in biotech, which is very unusual for a generous fund to have a top holding or heavy weighting in a sector that typically is perceived as requires very specialized knowledge. Yep. I think that's probably remains true, but I think that's one of the quiet biggest structural trends that's happening in China quietly is about 2 years ago, the multinational pharmaceutical companies have done more deals in China collectively than we have ever seen, or globally. And as we speak, I think last week they just paid the biggest deal to 3S Bio to buy out one of their molecules. So I think that's the space we're seeing innovation is taking at full front in China, and we're not betting 0 to 1. We're looking at some of those pipelines. They already started the general clinical trials in the U.S. But some of them, like Castle, is already backed by phase 3 trials data in China. And China has a relatively great patient pool to actually conduct large-scale clinical trial to give us some indication into what potentially it could be. So I think it's actually an area we have seen a long winter for healthcare in general in China. It's a space I would think many investors should start looking, and maybe more generous funds will start looking at some of those names could potentially be multi-billion sales a year.
What about your shorts? Any strong convictions? Because there are very, very few there, of course, under your fund. If you could tell us, share with us something about your shorts right now.
Our shorts now is more smaller positions concentrated in the U.S. space, where we think some of the business models are not as sustainable. But I think I must have acknowledged most of our returns to date has come from longs.
Yeah.
So, and on the short side, we typically will do some index hedges as well to bring down the market exposure. The biggest short position in the U.S. right now is MicroStrategy, but that's not so much direct alpha shorts. Is I don't have a strong view on Bitcoin, but I don't think a company that has underlying assets of Bitcoin should be trading at a big premium, and particularly when ETF on Bitcoin is already readily available. If anyone has a very strong view on cryptocurrency, they should go for the ETF instead of paying a big premium for MicroStrategy.
We were just talking about this earlier.
Yes,
actually.
previous guest.
Hasn't really worked that well, but let's hope.
Of course, you're going to be pitching this week at Sohn.
Yeah.
I know you can't tell us what your pick is,
No.
but can you give us any sort of clues? Is it fitting into the theme that you're talking about?
Yeah, I think so. I think for the past 2 years or so, we have been promoting the idea of China has gone from imitation to innovation stage. And that's across a couple of sectors. We have talked about biotech, we have talked about renewable energy. So, and as David mentioned earlier, there's still this huge valuation gap between China and the U.S. assets we have seen. So you probably would expect me pitching something out of China space.
Interesting.
Okay, well, it's already Monday. I'm looking ahead to Friday. Well, I am anyway every week, but yes, even more so.
It's like we helped her practice, right? It's for the Friday, but yes.
Let's do this again soon.
Yeah, thank you so much. It's great to have you in the studio. Founding partner and CIO of Apeiron Capital. We'll have more from the Sohn Hong Kong Investment Leaders Conference that, as you mentioned, mark your calendars on Friday. You can also get an insider's guide to the money and people shaking up the finance hub in our Hong Kong edition newsletter that's out every Thursday. You can sign up through the website, bloomberg.com/newsletters. Plenty more ahead. This is Bloomberg. Southeast Asian leaders have started 2 days of talks in Kuala Lumpur, seeking to deepen ties with China and Gulf nations and mitigate the fallout from President Trump's tariffs. Speaking earlier at the summit, Malaysian PM Anwar said he's pushing for talks with Washington.
I've taken the liberty also to write to President Donald J. Trump to seek his understanding to organize a U.S.-ASEAN meeting, which means we observe seriously the spirit of centrality.
Bloomberg's Avril Hong is at the ASEAN summit, and she joins us now. Avril, what's the significance for this move from Anwar?
Yeah, the Malaysian Prime Minister speaking there, the audience, a room full of ASEAN leaders, and saying that he's called Trump seeking a U.S.-ASEAN summit. Now, why is this significant? Because ASEAN leaders are meeting today, but tomorrow is when the big event happens. That's going to be the ASEAN GCC China Summit, the first time we've seen a trilateral summit of this nature from these countries. And against this backdrop, certainly, it's the idea that they are fast-growing economies, but they are looking to diversify amid rising tensions with Washington. Now, why is this important? Because even amid perhaps drawing closer with the GCC or China, the ASEAN countries need to be very careful in calibrating their message so as not to be seen as realigning away from Washington. Keep in mind, each of these 10 member countries are individually negotiating with the U.S. for lower tariffs. So they have to be wary of not antagonizing the U.S. amid the tariff negotiation process. And of course, we are watching out for some of these big conversations, including from Leung, who will be at the event. But ahead of all that, I spoke to the Thai foreign minister, and he highlighted when it comes to some of these relationships, it's not just about these countries and how they're courting Southeast Asia. It's also about how the ASEAN supply chains can be better integrated. Take a listen.
One country cannot, finish the whole product. We have to share the advantage in, the manufacturing. So that means we share the opportunities for supply chain.
The Thai foreign minister speaking there, keep in mind that there certainly is a chips ecosystem in this part of the world. And certainly we've heard from ASEAN leaders in the past week, they're increasingly talking about how it's getting very difficult to balance both the US and China, that path just getting narrower.
Okay, now, Avril, the other meeting that's taking place simultaneously, let's put it that way, is you have Emmanuel Macron, of course, in I believe Hanoi today. Just give us a preview of what to expect there as far as this Asian trip is concerned here from the French.
Yeah, Macron in Vietnam, but he's just an additional world leader that is in this part of the world and shoring up alliances and potentially investments as well with Southeast Asian economies. Keep in mind, Leung was also in Indonesia, set to be in Kuala Lumpur today till Wednesday. Now, when it comes to Macron, certainly this is coming against the backdrop of these EU tariff uncertainties. We heard how Trump threatened 50% tariffs. That's being delayed, but it's certainly about the uncertainties. So drawing closer to some of these ASEAN allies, when it comes to investments, he's talking about potentially energy, transport, infrastructure investments. Aside from Vietnam, Macron is headed to Indonesia, and then he'll cap the week in Singapore, where the Shangri-La dialogue is taking place. That's, of course, the defense summit. So you can see here, it's about investments, it's about shoring up alliances in this part of the world as well.
Avril, thank you so much. Avril Hong in KL for us there. Right, plenty more ahead here on The China Show. Welcome back. It's time for Trending in China. A look at what's making waves in national newspapers. And today it's all about fighting robots, quite literally. So the China Media Group, the World Robot Contest, actually,
yes.
Oh, look at them.
There are pictures. I love it.
This tickling contest in Hangzhou there on Sunday night. Fantastic pictures there. It was billed as the first ever humanoid robot fighting tournament. I wonder if Dana White's watching this.
Why don't we lead with this?
This should be our top story. Oh my goodness. Featuring contests that show off some and here's the thing, right? So I already seen this and I can't stop laughing. This is Yvonne's first time to actually see it because I was here on Friday. Look at how calm those humans look behind. What do we have here? So you have some of the, like Unitree Robotics was involved here. That's a company, of course, known as one of the, if you don't know, one of the 6 little dragons there that are disrupting the tech sector. You had the Global Times quoting, you guys can shut up Yvonne's mic, she can't just keep it together now, quotes the Zhejiang provincial government as saying that Hangzhou now has over 200 robot-related enterprises. Yeah, okay, why don't you look at the stock reaction to that?
I love it, it's so cute. Oh, it's like they're okay. There
No blood though, and no nose to get bashed in. If you look at that, they're faceless.
Yeah, that's great. Then more impact. You take a look at how these robot stocks are doing. They were surging leading up to this competition. It seems like we're coming off that now that it's done. But yeah, certainly that's one to watch here. But yes, we got to focus on sort of the whole theme, right? China invasion. We just talked to Apeiron about this, and we're seeing it in bigger ways, right? When you talk about some of these construction machinery giants as well.
Looking to new markets to certainly offset the domestic property downturn. You're certainly within the domestic market as you have margins there. So you have Bloomberg opinion columnist David Fickling, in fact, is writing about this, that this means that Chinese electric trucks will build the world's future cities, and David joins us right now to talk us through this. And David, we've seen already export waves of Chinese smartphones, electric cars, and now you're saying construction machinery will be the next big thing.
Yeah, I mean, I think it's really interesting when you look at the figures we saw last week. You know, housing starts in China in the 4 months through April. We're down to the levels that we last saw in 2003. You know, there were no boxing robots in China in 2003. So, you know, this is a very different world to what we're in now. And you know, imagine being a company that's making construction machinery for that market. It's a disaster. Sany Heavy, one of the biggest ones there, revenues domestically were down by about 2/3 last year relative to 2021. And of course, what they're doing to try and offset this is they're moving very aggressively overseas. Sany Heavy, Zoomlion, both of these actually now have the majority of their sales internationally. XCMG, Leung, a couple of the other ones are heading that way really probably in the next 12 months. And Sany Heavy is looking to raise about 1.5 billion in a Hong Kong IPO to double their overseas revenues. So that's the direction things are going.
And in terms of where they can export to, is there a market for them internationally, David?
I mean, I think there's plenty. Look at some of the announcements that came out around the time Trump was touring the Middle East last week and over the past month, just in the Middle East. You know, there's a Walt Disney theme park plan for Abu Dhabi, a new international airport in Riyadh, 22 billion infrastructure plan for Qatar. There's a lot of export markets there where these exported Chinese construction machinery pose quite a threat to incumbent players like Caterpillar and Komatsu.
All right, David, thank you. Great piece there. Our Bloomberg opinion columnist, David Fickling there. Make sure to check out his column this morning. Before we go, we're going to check out some of these movers here when it comes to the e-commerce space. So obviously, Meituan is going to be the top one for investors here this week as they report earnings later on today. The stock is still feeling quite heavy. We're down some 5% right now, Dave.
Yeah, 127 is a level you want to watch. That was, I believe, the low that we hit this year. I mean, we're not far from that, really. We'll watch what earnings look like, and certainly the story across the broader space is the draft guidance published, I believe, on the weekend. I believe on Sunday, in terms of what the merchant fees are, and I think there's a consultation period, I believe, as far as this story is concerned. Right, first session of the week is just about 90 minutes in. Hang Seng Index looking like this. Underperformer last we checked today against the broader backdrop of most equity benchmarks doing well going into the mid-parts of the morning session here in the Asia Pacific. That's it from us. We'll see you all tomorrow. Happy Monday. This is The China Show.